How to invest in an election year. Lots of market volatility, the fear of long-term care and the costs and how that will affect your retirement, and then how conservative can you actually be in your retirement. All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check us out online. Great resource website, efmnw.com. All letters, efmnw.com. Links to the TV show Elevate Your Wealth, radio shows in podcast form. Great information there. Again, certainly a great way to kick the tires. Get to know Mark, Casey, their entire team. They are certified financial fiduciaries, helping their clients get ready for retirement. I'm Morgan Patrick, consumer advocate. Each and every week, it's always about the importance of having a retirement plan, being ready for what you want to be, your golden years. Guys, before we jump into some very interesting articles this week, how was your overall week? I can see the guys. We're hooked up virtually because our studios are in different places, but Casey's wearing his Mariners T-shirt. And,
got to.
You know, Mark looks like he's getting ready to go to a dance club. I mean, everything looks good.
He does, too. That's a great description of his shirt right now. Doing the salsa in the back. Yeah. No, we've been good, man. It's been a busy week, busy month. Lots going on. We're just wrapping up, I guess, July and August now. But lots going on, and the Mariners. You mentioned the Mariners, right? So I got to go to that. They made a couple of trades recently, which is really exciting. Rosarina, Turner. That's really brought some energy to the team, which is exciting. They've been playing better. There's still some room for improvement without a doubt, but we'll keep it on a positive note. So it's exciting to see those guys, and it's exciting to see management taking an investment in the team. I think really that's the biggest thing, right? From a fan perspective, there's been some disappointing comments from management, especially last year. So to see them put some money into the team is really cool.
Yeah, and we've had some really good weather along with everything else. And this time of year in Seattle, it's beautiful. Most July, August, and September are great months for us here. So, and we got great restaurants. Had a wonderful dinner with some friends, anniversary dinner actually, down on the waterfront at a place called Aqua, and just awesome for seafood. So,
how many years is it for you guys this year, Mark?
44.
Hey,
44. All right.
44. Congratulations.
Yeah.
Miracles don't ever cease, right?
No, I mean that's fantastic, and 44 years. That's awesome, dude.
Yeah, it's
awesome.
a big deal. That's a very big deal. Yeah.
Well, and you gotta work at it, right? I mean, it's
just
a
ask Mark's
relationship.
wife. No, I'm just kidding. I would never say that.
Well, she would.
You guys are related by marriage. I'm surprised.
Yeah, right.
I'm surprised it's lasted this long. I mean,
Exactly.
I expect to show up one day and just look across the screen there and just see you guys. You remember those inflatable Whammo boxing gloves? You just stick your hand in. I can just see you guys just like, hey, let's have
we
the
should
show
get
this
those.
way.
Yeah. We've been trying to figure out fun stuff to do at the office.
Rock'em
We should get some
sock'em
of those.
robots.
That's what I was just.
Or like those sumo suits. We'll get those sumo suits and run into each other. We got a big hallway, right? So we could do
Hey,
that.
I'm sure the Mariners are going to have that as part of their entertainment between innings. You guys can volunteer.
Maybe we can get out there.
Sponsor it.
Yeah, that'd be good.
And then of course Mark blows out his knees. That would not be good.
Yeah, really.
That would not be good. Those suits are heavy. I've been in them. They're not to be taken lightly,
There
so
you
to
go.
speak. All right, so investing, election year. There's so much uncertainty, guys, and it's gotten ratcheted up several notches in the last couple of weeks. Just the article you guys have picked out for us to talk about is how to invest in this fraught election year.
Mm-hmm.
Yeah, so one of the things that I just want to start our listeners to think about is fundamentally the market doesn't care. But yet in our minds, we tend to make a big deal of whoever's going to be the president. Everybody gets, what's going to happen if a Democrat wins or what's going to happen if a Republican wins. But it's interesting this article really laid out some interesting facts, and one of them, it looked at portfolios from January of 77 all the way through May of 24, so very recent. And here was the interesting statistics. A Democrat-only portfolio was at 849,000. The Republican-only portfolio was only 162,000. But notice this stat. The utterly apolitical portfolio was 1.6 million. So again, people tend to maybe make some decisions that they end up regretting because they're so worried, oh my gosh, if a Democrat gets in or if a Republican gets in, it's going to do this or that. I remember when Trump was first elected, everybody thought the market was going to tank. And what does it do? It went on a massive run. So again, upward run. Now we've seen some volatility over the last few days. In fact, it looks like
it's increased over the last couple of weeks, right?
I was going to say let's jump on that. We were traveling and we were in the middle of a kind of a mastermind session, and it came across. This was like a Saturday morning. And I guess Friday night, Warren Buffett decides to go to cash on a lot of his stuff.
Yeah. Mm-hmm. Yep.
Your reaction to again Berkshire, $277 billion he pulls back from the stock market. Just your reaction to that, and how do you calm investors' fears when somebody like that pulls a lot of cash out?
I think that's the hard part, right? Is that you've got this this mogul in the industry that everybody looks to, and rightfully so, right? I mean, he's been a great investor, but those type of moves without any narrative from him create lots of havoc in the market, right? And that's the problem. Is there's so much emotion related to it, and there's so much concern, like we're talking about with the election year of people being worried about who the next president's going to be and all those kinds of things, and just how that has an impact on the market. And we'll come back to that study in a second. But I would say from our perspective, if your only source of income in retirement is the market, we understand your concern.
That's a problem.
We get it, right? We get it. There's a lot better way to do it. There's better options. There's different ways to invest. There's way to structure things. And we're not going to go into all the nitty-gritty details right at the moment. But the reality is that's why we're always coming back to a plan, right? If you have a plan, the volatility is undoubtedly a portion of that plan because we know that that's what the market is, right? Even on an upward swing, the market has downturns. And on a downward swing, it has or on a downturn, it has upward swings. So we have to be ready for that no matter what we're doing. And our income cannot be solely reliant on the success of the market. That's what creates a lot of this havoc.
Yeah, so the one thing I just want to add, and back to Warren Buffett for a second, is you're right. I have a lot of respect for him. He's made more money in the market than any other human, so we can say what we want. But the one thing that's interesting, when he hates cash. That's the other part of this. He doesn't like cash. So what's he telling us? Well, deep down, I think he's really saying this market is overpriced. Okay? And so he's pulled back for a reason. He believes a correction might be imminent. And now, is he going to be right? No, who knows, right? But that's the one concern that I have for a lot of clients, as Casey just mentioned. If you're going to base your retirement on your market dollars, and this does correct, and we lose 20 or 30 or 40% of our income, that's going to hurt bad. And so, do you have a plan to fix that?
Yeah, I was going to say, guys, that's why it's so important to work with fiduciaries. Have this plan. If you're out there doing this yourself and you're acting like a day trader and you're trying to figure it out, that's when the panic sets in. If you're working with pros, it's a little bit more even keel because, as both of you have mentioned, the market is going up and down. It is going to return. The concern is we've been on a run for 14 years, so we're expecting a little bit of a dip. We saw a little bit on Monday, but it's starting to inch back up again. But having the plan, you can kind of take a little bit of a step back and not be as tied to the ups and downs of the market.
Yeah, that's it, right? You've got to be able to disconnect to some extent, right? Because we know that that's what the market does. And that's really the concern, is feeling like that's the only thing that you can use to create income is the market. You've got to have a plan of where you're going to have that income come from so that you feel secure. Now, I want to go back to that article just real briefly. Mark mentioned the kind of the Democratic-only portfolio versus Republican-only. The concept there is that it started in 1977, right? This is hypothetical, but started in 1977. Each side started with $10,000. And the reality, or the hypothetical, the way it portrays itself, is that the one side only invested when there was a Democratic president, the other side only invested when there was a Republican president. And so those results are widely different, right? The Democratic only portfolio did much better than the Republican only, but it's a fairly narrow sample set, right? This is not over the last 100 years, so we can't say that one presidency is better than the other. What it really boils down to is that the portfolio that stayed invested that entire time is the one that did the best.
That's the
right?
key to the whole
That's it. So, we can't try and time the market. And so for those that are listening at home, this is your opportunity to get a plan, to get on the schedule with the two of us and figure out how to make your investments work for you. So this is a written financial plan put together by our team of certified financial planners. We'll talk about how you're currently invested, how you can invest differently for the future, how taxes are going to affect your investments, what you can do to offset for long-term care and make sure that you and your family are taken care of. So if you've saved $250,000 or more, don't hesitate. Pick up the phone. Give us a call.
Here's the phone number, 866-668-3625. Again, 866-668-3625. You heard the Ticket to Ride. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And, folks, you are going to walk out with a written financial plan. Call the number, 866-668-3625. If you've been wringing your hands, if you're worried, this is your opportunity to kind of get some peace of mind, get some confidence on what's going on in that portfolio. You're going to find out either way. You're doing okay or you got some work to do. Call the number, 866-668-3625. That's 866-668-3625. When we return on Elevate Your Wealth, how to shrink long-term care fears and shortfalls. The latest articles, we'll talk about them coming up next. We are back on Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for their retirement. They're certified financial fiduciaries, and you can find them at Elevated Financial Management right here in Seattle. Check out their website. Great resource for you, efmnw.com. All letters, efmnw.com. TV show, Elevate Your Wealth. Links are there for you. You can see their pretty faces. And they're also our podcasts there for you, our radio shows in podcast form, so you can hear those lovely tones. And it's always about retirement planning. Again, I'm Morgan Patrick, consumer advocate. We're hitting some articles. We've already talked about, investing in what has been a turbulent election year. And now we're going to shift gears and talk about long-term care, the fears that are out there. Again, how to shrink those fears. Guys, this is a subject that's going to hit us all at some point. We're talking about health care, long-term care, but it's also one of the subjects that a lot of people don't want to talk about. It's the end game.
Mm-hmm. Yeah, I'm in this business basically because of what happened with my grandfather, and I watched him lose everything from a liquid asset standpoint when he did go into a nursing facility when he was in his early 90s. And so, but you mentioned this, Morgan, most people, including a lot of our clients, a lot of the people that come to our classes, they want to just not talk about this. We're talking about our own mortality, and people just don't want to do it. And, but if there's an atom bomb that's going to go off inside your plan and blow it to smithereens, it's going to be this one. Right now, the costs are, in our area locally here, you could be looking at, for full-blown nursing care, close to $13,000 a month. Where is that going to come from? See, so again, and the percentages are staggering high as to how many people are going to really use it. Now, this article talked about more than half. A lot of the federal statistics will tell you close to 3/4 of us are going to use some form of long-term care. It could be assisted living. A lot of us would like to be able to use home care if it comes to that. And then, of course, worst case scenario being in a nursing facility. So how are you going to tackle this if it happens? We have clients right now that are dealing with this, right? So it's very real to us. It always has been for me, and it's dear to me to make sure that my clients at least acknowledge this, because if they don't, it can be a big problem.
And I think too, it's interesting, sometimes people will say, well, I'm going to move out of state if that happens, right? Like that's kind of the mindset, right? Of like, it's really expensive around here. I'm going to move to Nebraska or something like that, right? It's
North Dakota.
It's a lot less expensive there. Well, that's really the point, right? Is we have clients that have family members that are in a long-term care facility in North Dakota, and it's over $14,000 a month there, right? So it's more expensive in that area for whatever reason. I can't put rhyme or reason to that, but for whatever reason, it is more expensive there than it is here. So, and sometimes the other piece of that, right, is, well, it's not going to happen to me, right, which we all like to think that, but you're just burying your head in the sand. So, it really can create this huge issue. And the problem is it's not just an issue for you, it's an issue for your loved ones, right? Because not only are you now in a circumstance where you're not having the best quality of life, but your loved ones, if you haven't taken care of the financial aspect of this, potentially now have a burden to help take care of you and those kinds of things. And undoubtedly your family wants to help you, but that's not anybody's idea of how they want things to be, right? So it's important to have that conversation and have a plan. And make sure that you've considered all the things that can come up. That's really what creates a plan, is looking at all the possibilities, right? It's not just, well, here's scenario A and that's what I'm good with. There has to be a backup. There has to be options and levers that you can pull to make sure that things are taken care of.
And most clients, they don't want their parents taking care of them. They don't want that burden to fall on them. So again, what are we going to do? Now, a lot would say, oh, I'm going to take care of mom and dad no matter what. Well, until you've been a caregiver, and if you're still working and possibly raising your children, and there's a lot of boomers that are dealing with this right now today. It's a staggering amount that are taking care of their parents. They're also having to help take care of their grown children that are struggling financially. And it's unbelievable if you don't do some planning, how devastating it can be to your own retirement. And that's why we want to talk about it. We wanted people to understand a conversation and then put together a plan, which I'll talk about in a minute here. But I know, Morgan, you've got a thought. This is something people want to avoid, and there's no reason to avoid it because it's going to happen to every one of us. That's the reality.
It's not an easy conversation to have, but it's one that needs to take place. And we talk about it often, almost weekly, about being proactive in so many areas when it comes to planning. Healthcare should move right up to the very top. And as tough a conversation as it is to have, you need to be having it. Here at Elevate Your Wealth, powered by Elevated Financial Management, you've got an opportunity to come in and talk about your overall situation. There are a lot of you out there that have done an amazing job. You've accumulated well. You've put your money into your retirement planning vehicles. And you think, you know what? I'm just going to get to my retirement date. I got to the number that I want. We're going to be able to make it. But do you really know? Are you going to have enough money for retirement? You don't have a plan. You've got accounts. This is your opportunity to start the planning process. The number to call is 866-668-3625 if you've saved $250,000 or more towards your retirement. These strategies are going to work best for you. And best thing, you come out of the meeting, you leave the checkbook at home, but you're going to walk out with a written financial plan, and it is complimentary. All you've got to do is call 866-668-3625. We're talking about the long-term care fears that are out there. And guys, I'll throw this at you. A lot of people may be hearing this show going, you know what? I got Medicare and kicking in when I'm 65, right?
Yeah.
I mean, things are good when I hit 65.
Yeah. And Medicare is going to take care of it, right? And
right.
Boy, that's an awakening that will probably send you all the way from your bed up to the moon, because it's not going to happen that way, right? And so, people think that Medicare covers long-term care. You're going to be doing good if you get up to 100 days. And even that is pretty much a stretch. My grandfather, who had Alzheimer's, didn't get one dime for his long-term care when he had Alzheimer's, and he lived with that for about almost 7 years. But one of the biggest concerns is, standalone plans are expensive. We'll get that right on the table. And there's been a lot of rate increases over the years on these older policies. That's what kept my grandmother from wanting to do something. She thought it was never going to happen to them. It was too expensive, and that if she didn't use it, their money was gone. And I said, but Grandma, if you don't use your car insurance and have a claim, do you get any of your premium back? And she had to go, no. I said, exactly. But now there's these hybrid type policies that basically have a life insurance portion to this plan, to where we can use a death benefit to then pay for long-term care. But if you don't need it, all of the premium, all the money comes back in the way of a tax-free benefit to your children or to your estate. So there's ways to address this now that a lot of people have no idea, and it can be pretty exciting to bring this up with clients when they realize they can get long-term care without feeling like they're just flushing money every year or every month down the you-know-what, because they're not going to use it, they feel, which that's a mistake in and of itself.
Yeah, and it's interesting. This article brings out only about 10% of retirees have private long-term care coverage, right?
Yeah.
So,
Wow.
I mean, that is far and away a major issue when it comes to this type of planning, right? And that's why we talk about this so much, because there's a lot of misconceptions surrounding this. Like Mark mentioned, people think Medicare is going to take care of everything for them, or there's a certain level of coverage for long-term care, and that's just not the circumstance. And the reality is, if you don't have a plan for long-term care, the government has one for you. It's called Medicaid, and you're not going to like it, right? So this is your opportunity to get something in play that allows you to protect what you've got, and allows you to make sure that things go the way you want them to go, and give you some level of control over that circumstance, and ultimately make sure too that your family is well taken care of. Because that's the other piece of this, where we see one spouse needs long-term care and the other spouse ends up very poor because they have to take care of the one spouse that needs that care, and they haven't gotten the insurance to deal with it.
Yeah. And you got options, folks. I mean, it's about sitting down and talking about this well before. It's the proactive part of this. And to, get into the office, sit down and say, you know what are some options out there for us? You can do that right now. Mark, you've got appointments. The firm has appointments. These are complimentary. People are leaving the checkbook at home, but kind of walk us through how they're going to go.
Yeah, so please, if you're listening today and maybe you're worried about long-term care, maybe you've got parents or grandparents that are struggling with this very issue right now. So you're thinking, how's this going to affect my plan or my retirement? We just talked about the importance of how should we invest when it comes to an election year. What about taxes? We haven't even talked about taxes today. Everybody knows that's going to be a big issue in this next year. Trump's plan sunsets at the end of 25, so we know we got about a little over a year left on that. So again, what are you going to do? Please let our team of certified financial planners look at your specific situation, and we're going to talk about long-term care. We're going to talk about taxes. We're going to talk about health issues. All of these things, please just pick up the phone. Give us a chance to just have a conversation. You can leave your checkbook at home, as Morgan mentioned, but give us a call and let us help.
Yeah, I mean, there's no pressure here, folks. We are here to help. We walk the walk and talk the talk. These appointments, again, are complimentary. Call the number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number now. Secure one of these appointments, 866-668-3625. When we return on Elevate Your Wealth, can clients really afford a more conservative asset mix? We'll talk about that when we return right after this. We are back on Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. They've got 42 years combined experience between the two of them. Again, it's all about retirement planning, getting their clients ready for that retirement. They're certified financial fiduciaries. Again, the firm's got a great website, great resource for you. Check it out, efmnw.com. They're all letters, Easy to remember, EFMNW.com. There are links to the TV show, Elevate Your Wealth, our radio show and podcast form there for you. Great information. And again, you can really kick the tires there. I'm Morgan Patrick, consumer advocate. We're going over some great articles today. Already discussed, how to invest in a fraught election year, how to shrink long-term care fears and shortfalls. They should be at the top of your list. You got to have some concerns, and certainly you need to have a plan. A lot of you out there sitting on portfolios, and you haven't yet started to map it out. Well, you're going to get an opportunity to grab an appointment with Elevated Financial Management, and they are cost-free. You leave the checkbook at home. You come in and talk about your situation. Now, maybe you haven't started planning, or maybe you're in the middle of something, but you're a little bit frustrated. It is okay to get a second opinion. Grab one of those appointments at any time by calling 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, 866-668-3625. All right, gentlemen, can clients really afford a more conservative asset mix? We're going to talk about this in pretty broad terms, but people are nervous. Stock market is the stock market. So when you're talking about a conservative mix, can you afford to do it? I think what they're basically saying is, we got to be in it, to be, taking advantage of the market, but we also need to have some of it somewhere safe.
Yeah. That balance is really hard to strike, right? You hit the nail on the head. If you're going to be in it, you have to be in it. Otherwise, there's no point, right? You might as well just get out and buy a CD or something like that. So, if we're going to take risk, we need to be very intentional and specific with the risk that we're taking and understand what that truly means, right? There is varying levels of risk in the market, but I think really where this conversation starts to become different in the way that we do things is that when we talk about safe money, we mean truly safe money, right? So we're not talking about just trying to have a certain mix of bonds and stocks and that being your conservative money and your risk money or using a target date fund. We're talking about truly having investments that are decorrelated from the market. And then the money that is in the market, that's our longer term money. That's the money that we can take risk with. But again, it has to be intentional, right? And a lot of times we see people trying to put their investments on autopilot using a target date fund. And we're just not big believers. We think the cost associated with them is not appropriate. And we think that oftentimes the mix that's inside of those funds really isn't appropriate for the majority of people. It's really a one size fits none. And yet people are constantly putting their funds there. Now, we know that inside of your 401k and that kind of thing, that's probably the only choices that you have, but there's lots of other options out there. And so it's about, again, being intentional with that and making that be a part of the plan.
One of the things that I just wanted to say in this regard is people... age-based planning, we believe, is really important. We really use the rule of 100 a lot. Well, what is that? Well, take your client's age, subtract it from 100. So if I've got a 70-year-old, 70 off of 30, off 100 leaves me 30, right? I don't want much more than 30% of that client's portfolio at risk. And as we get older, fear becomes a problem, right? Sequence of return risk. Because if the market starts to tank when you start to draw down, it can be devastating to how quickly your money will run out. And we teach a whole class on this. And so again, having a plan is going to help alleviate the fears. But more than anything else, I think Casey agrees with this 100%. Everything that we do springboards off of income.
Yeah.
We've got to have the income be guaranteed and set. And if we're going to derive our income off of the market, maybe dividends can be great. We're not against dividend-paying stocks, but again, they can fluctuate. Do you have guaranteed income that's going to pay your basic necessities, your basic bills, and is it truly guaranteed? Because if you're basing it on market, well, the volatility, as we're seeing right now, can dramatically reduce your income if you're not careful.
And I know there's a couple stories that we want to share from around the office this week, but just going back to that idea of where's your income coming from.
Yeah.
I mean, Mark hit the nail on the head. Really, it's about making sure your income is taken care of. And if it is, then when you take risk in the market, it's not so scary, right? Yeah. And that's really the key. If you're relying on the market for all of your income, what happens in the market will drive your emotions throughout the day, right? But if you create your income and it's guaranteed, your income is taken care of, then you can let your money do what it does in the market and be successful. But it's time in the market that wins, not timing the market that wins, right? And so you have to make sure that you're being intentional with how you invest. And I think the other part of this too is the nomenclature, right? It's really subjective to say conservative. Sure. What that means to me might be totally something different in your mind, Morgan, and totally something different to Mark and to every client that walks through our door, right? So we have to be very specific when we talk about being conservative or taking risk and all those things and making sure that we're speaking the same language.
Yeah, I mean, it's going to be different for everybody. We talk about it almost on a weekly basis. Where are you on the time horizon? You're going to be a little bit more in. If you're younger, as you get closer, as Mark's always talked about, you got to dial it back and you got to have that guaranteed income. And then if you have the guaranteed income, then you got some house money, right? You know it's going to be there, and you can be a little bit more aggressive with that house money, so to speak. I want to remind you, look, we get it. People are nervous. We're nervous. I mean, it's the economy. It's the market. It's your retirement. The opportunity to get on the calendar with Elevated Financial Management, meet with Mark and Casey and their team is no cost, no obligation. There is no pressure. They're not going to try to sell you anything. They're going to have a conversation with you. You're going to end up being the decider. They're just the advisors. Remember that, okay? The number to call is 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, secure one of these appointments right now. Get to the front of the line, 866-668-3625. All right, gentlemen, I know you've got some stories for us. You've got some clients. I want to ask this question before we tell the client stories. When you sit down and people come in and they're pretty confident in what they have, right? And yes, you should be if you've saved well. What's a percentage you think people feel like they're conservatively invested when they're actually not? The risk level in those portfolios.
That's a good question.
Yeah, after you sit down and you break it down for them, there probably is the jaw on the floor and you got to help them pick it up because a lot of their portfolio is much more at risk than they thought.
Yeah, that's I don't know what percentage. I would say 90% plus.
Probably 90
I very rarely does somebody come in here and are they invested as they believe that they are, right? Or as they've been told that they are. And again, that's why we always start from an analysis perspective. We do not talk about this shiny new stock and these returns and all that kind of thing. We talk about where you're currently at and what that means and how that's going to affect you, and then what can be done to improve that, right? And what you can do to make your finances fit your future instead of trying to cram your future into what your finances currently are. And so most people are invested much, much more aggressively than they realize. We've had a couple folks come in here that are invested more aggressively than just the S&P 500. Right. So there's certain softwares that allow you to assign a risk number to certain things. And we use a software called Riskalyze, which is great, really helps have that conversation. But the S&P 500 on a scale of 1 to 100 comes in at about a 74, 75. We've had people come through our doors that are an 85, 88. Wow. And they don't know. That's the thing is they don't know, right? And that is, I mean, you should see the look on their face. It is frightening for them, and it kind of makes us uncomfortable too, right? To be the one telling that story to them and showing it to them. So yeah,
I mean
that's
like 150 miles an hour, no seatbelt or airbag.
Yeah, that's exactly right. Yeah, it is. Yeah, it really is.
In a trike that's got a motor on it, right, with no sides. So again,
a radio flyer.
I mean, we're chuckling. Listen, I mean, it's very, very important to know what your risk number is. Where are you? And we say this phrase all the time. You don't know what you don't know. And if you're just sitting on a portfolio and you've been managing it yourself or kind of just letting it sit there, your risk number could be in an area where it's very uncomfortable. I think people they're procrastinating. They don't want to know. The market's been on a 14-year run.
Yep.
Why am I going to mess with it now? Now's the time to be proactive and get in and really dissect what you got. and what you need as you move forward?
See, there's a couple of, emotions that guide all investing. There's two, basically, greed and fear. And the problem is now it's hard for people to get off the greedy train a little bit, right? Because like you mentioned, Mark, they've been making money now for 14 years. So they think it's just going to continue, right? But then the market starts doing, especially what it's doing now, then all of a sudden fear takes over and then everybody wants to jump ship, which is sometimes the worst thing that you can do. So again, we try and help our clients back them off the ledge a little bit, because if they've got a plan like Casey's mentioned, we can afford to take the ups and the downs, right? I can't not think about this story, and I'm going to make a quick version, but a guy that I was fishing with, he basically had 3 pensions. I asked him where his income came from. He said, I got 3 pensions, Social Security. I went, wow. How much is your income? He basically said about $13,500 a month. I was like, boy, is that awesome. But the bottom line is, he said, I also have $1 million in, an account, a brokerage account. And the funny part was, he looked at me and said, if I lose my money in the brokerage account, my life's not going to change. It doesn't matter. And well, we knew that was not true, but he was right from the standpoint. His income, he gets the bucket filled up every month, the same. And he doesn't spend $13,500 a month. So that's true retirement freedom for our clients, we believe, when their income is set like that and they can afford to not worry about the red money.
It's important to be ready for retirement, to have that plan, to understand what's going on with your money. The opportunity to have a sit-down with Elevated Financial Management is right now. Casey, we've got appointments. What's going to happen if they can grab one?
Well, if you're willing to pick up the phone and give us a call, again, this is an opportunity to get your own written financial plan put together by a team of certified financial planners. Something that's custom tailored to you, right? Not a one-size-fits-none type plan, not cookie-cutter investments that everybody has, but something that's custom tailored to you, to the goals that you have in retirement, how to lessen your taxes, how to deal with long-term care, how to make sure that your income is guaranteed. Don't hesitate. Pick up the phone. Give us a call.
Here's the phone number, 866-668-3625. Again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. These are complimentary. Leave the checkbook at home. You're going to walk out with a written financial plan just to know kind of where you are. 866-668-3625. When we return on Elevate Your Wealth, well, it's time for scenarios. I'll throw them at the fellas. See what they come up with. That's all right after the break. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. Elevated Financial Management, where you can find them right here in Seattle. Over 42 years combined experience between these two in the planning business, getting people ready for their retirement. Certified financial fiduciaries, yes, they are. I'm Morgan Patrick, consumer advocate. Each and every week, it is always retirement, the importance of having a plan. Check out a great resource website. It is efmnw.com. Again, all letters, easy to remember, efmnw.com. There are links to the TV show, Elevate Your Wealth, our radio show and podcast form there for you as well. Again, great information on retirement, contact information. You can reach out to Elevated Financial Management and get one of those appointments. We'll make those available here during the course of this final segment. Before we get into our scenarios, though, we've got some client stories. We'll see how many we can get to, but guys, take it away.
Yeah, I think it's good to always kind of talk a little bit about what's going on and what we're seeing out there. And, right now, and I think the story that Mark's going to share is kind of focused on this as well. But right now, with interest rates where they're at, that really has changed a lot of the investing world, right? So there's always concerns from a negative perspective about, well, rising interest rates, that's going to hurt the market, that's going to make my purchasing power lower. And that's the truth, right? We have seen that, right? If you go to buy a house and you look at the numbers associated with that, your purchasing power is low. But there's some positive effects that it can have too. And so I think this one is pretty interesting. We've had somebody come in recently and she had an annuity. And that annuity she's receiving income from. And I think right now it's like about $1,800 a month is what she's getting from that. And we looked at a couple things, and just where interest rates are at now, if we were to move that money to a different annuity, right? And I know I'm using the A word, which is a big no-no, but we do talk about it on the show. Moving that money from the annuity that it's currently in and moving that to a new annuity with the higher interest rates is going to get her $630 more a month, right? Yeah. It's the same concept. It's the same guaranteed income. It's the same lifetime guaranteed income. If something happens to her, that money that's in the account goes to her beneficiaries. Nothing else has changed, but because of where interest rates are at, it puts her in a better position, right? And so we call that refinance your retirement, right? There's an opportunity right now to do that,
right?
But the Fed is talking about lowering interest rates, right? And so the window is closing to potentially put yourself into a better position when it comes to these type of things. And so now's the time to act. Yeah, Morgan.
You bring up a really good point. I think a lot of people that are in an annuity, and yes, we are talking about the A word, it's that perceived negativity of the annuity, usually a variable annuity. Right. There are so many different kinds of annuity, different types of annuities, customizable annuities. These are all things that are worth a conversation because I think people feel like if they're in an annuity, Casey and Mark, they're stuck.
Yeah.
That's not the case.
Yeah, I think that's it, right? People do feel stuck. They feel like that's it. There's no choices. And that isn't the case, right? As we just talked about. And the truth of it is, in some circumstances, it doesn't make sense to move the money, right? It makes sense to leave it where it is. Maybe you're already in the best circumstance. But right now we're seeing that that's not the case a lot of the time because of where interest rates are. So I know Mark has a story he wants to share kind of along a similar line.
It is. That's it. You just don't know. I've got a client that has moved from Washington to Oregon now, and his contract is about 6 years old. So, if you've got an annuity, but you're worried about maybe a surrender charge, the surrender charge versus the cash value, the surrender value is going to be lower, right, than the cash value is. But what is very interesting right now, we can take a contract that may still have a fairly significant surrender charge attached to it, and we can move the money to a new contract, and with that lower amount, it's generating way more income. In this example I was just going to talk to you about, the contract has about a $1.1 million what we call protected income value that could generate right now about almost 50,000, 49,000 and change, 49.5 or so. But by moving the money and taking only 775,000, so it's a lot less, right? But it's generating $65,000 a year in income versus 49. So you tell me, are you losing money? I would say absolutely not. You're getting way more income. Plus, this income on the old contract can't be turned on for 4 more years. This one starts immediately, so they get that number times 4, which is in this case is over $250,000 more. So again, don't think you're stuck or there isn't other options, because that could not be farther from the truth. And right now, we're seeing it pretty much on a daily basis, and we're really able to help our client's position.
I mean, it's worth a conversation. Look, you may be in that situation. Maybe you feel like you're stuck. It's an opportunity to come in and talk about it. These appointments, again, are complimentary. All you've got to do is call this number, 866-668-3625. Get to the front of the line, grab one of these complimentary appointments. You're leaving the checkbook at home. They'll take a look, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, grab one of these appointments. Again, relieve a little bit of the stress. Just have that conversation. It's your first step to being proactive when it comes to your retirement planning. 866-668-3625. Do we have time for one more story and then we'll do some scenarios?
I think we can jump to scenarios, yeah.
Let's do it. Okay,
let's do it. Yeah.
Scenarios. All right, here we go. All right, Mark, first one up. Is it relatively easy to roll a 403B over?
I'm going to answer that as sometimes it is and sometimes it isn't.
It depends.
It depends, exactly. I just worked with a couple longtime clients of mine, and she's got money left in her 403B. So we called. It happens to be in the PERS system, which is the Public Employees Retirement System. She's PERS 1, which is great. Now there's PERS 1, 2, and 3. The older ones that have been there longer are going to be with a lower number, right? So they have actually better benefits. PERS 1 beats PERS 3, of course. But when we talked with the plan administrator about our options, I mean, I'm sitting there and I was confused. They were sitting with me, and I thought to myself, wow, if I'm having trouble with this, and I was able to ask the questions and straighten it out, but this client and the husband would have had no clue whatsoever about what to do. And I spent probably an hour on the phone with the administrator getting this all straightened out for them. So again, this is where working with someone that knows what to ask, understands this, they couldn't have been more thankful to have somebody in this field help them to make a decision, because one of the other decisions she had to worry about making was about whether she should do 100% spousal or a straight life option. And with the husband sitting there, I'm thinking, well, John's probably going to want the 100% spousal option, right? Versus if the wife dies, the money stops. We would call that the widow's penalty. So there is some planning that is so important to understand different things when it comes to this. Casey, you got something to add?
Yeah, I think that kind of concept, right, of how complicated sometimes employer plans can be.
Yeah.
It's not only complicated to get the money out, right? It can be complicated just to decide what to invest in inside of the plan, right? And it kind of makes me think of a story, and I think we've shared this maybe on the radio before, but we were teaching a class out at Green River. And it's one of the classes that we teach at Green River, Renton Tech, Bellevue College, at various colleges in the area. And what happened was we talked in that class about how often it is difficult to figure out what funds to use inside your 401k because you don't really understand what they are, right? It's kind of like this like smoke and mirrors thing. Like it's got a name, but what does that really mean? And so after that class, somebody came up to me, it was a woman, and she said, that really resonated with me because I'm the plan administrator for our plan, and I'm the person that people are supposed to be able to ask those kinds of questions to, and I don't feel like I understand it. I don't feel like I know what the options are or what they mean, right? And so, whether it's getting the money out, whether it's investing inside of those plans and the limited choices that you have, there's a lot of complications there, right? And it's important to have somebody that you can trust, that you can lean on, that can help guide that. Because there's just so much detail, and you don't know what you don't know, right? That old saying. And so you want to be able to figure out those answers.
Yeah, I mean, a third party working on your behalf, looking at it from a different viewpoint, might be able to see some things that you've just missed and also help you answer some questions. And as we found out, a current administrator of a plan confused by what was going on. So, you're not alone. Make sure you're working with pros that can walk with you down this path. The opportunity to get on the counter with Elevated Financial Management right around the corner. These are complimentary appointments, so stay tuned. We've got one more scenario for you, and here it is. I have close to $1 million in tax-deferred funds. I am currently 54. Would it be possible to spend down before RMDs kick in, or would conversions to Roth in my early 60s be my best pathway?
It depends, right? There's a lot of details to this that we don't have. Now, I would say to try and spend down $1 million before RMDs kick in is just surface level, probably not the best choice, right? I would lean more towards Roth conversion. And because in that circumstance, you're choosing to pay the taxes, but you're reinvesting the funds. And you know what? If you've got lots of other monies invested in different types of accounts, and maybe you already have Roth money and some non-qualified money, that kind of thing, that can really change that answer, right? It's not a one-size-fits-all. However, I don't think that at any circumstance in your life are you going to look back and wish that you had less tax-free money, right? So Roth conversion is likely always a good option. Is it the best option in this particular circumstance? There's other details that we would need to have. But again, of course, that's why we make ourselves available to have that conversation. So, it could be the best move, but it's at least a good move. But maybe there's other options too.
A lot of the other firms don't want to address taxes. Right. In case we know that. If you talk to one of the big box stores, they'll tell you to go talk to your CPA or your tax preparer. Well, we do the opposite here. Tax planning has to be a major part of every plan that we do, because if you don't address that, it's going to be the biggest eroder of your money if you're not careful.
So important, guys, to just basically have your finger on the pulse of what's going on with your own portfolio. So have a plan, be ready, be proactive. The opportunity to get on the calendar is right now with Elevated Financial Management. These are cost-free appointments. Mark, walk us through.
Yeah, so if you're listening right now, please pick up the phone, give us a call. We want you to keep your checkbook at home. All we ask is let's have a conversation. We have a team of certified financial planners that'll help put together a written plan for you. We're going to be talking about your income. Where's it going to be coming from? Is it guaranteed? We just talked about taxes a little bit. Do you have any kind of idea what you should do from a tax perspective? What about your health? Do we need to worry about when you turn 65, you got to make a decision whether it's going to be Medicare supplement or a med sup, and then there's long-term care to put on top of that. So all of these things are weighing on your mind. Please give us a call. Let us help put together a plan that will help you to have a retirement of your dreams and not just be a fairy tale.
All right, you don't want the fairy tale, folks. You want the dream. 866-668-3625. It's your retirement. Take charge right now. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, grab an appointment, get in the front of the line, 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Mark Stimpson and Casey Elkins, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.